Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Hello, everybody. Welcome back to the Blockchain Show. This is episode 148. We've got a very special guest, Mr. Michael Shaulov, the CEO and co-founder of Fireblocks. Michael, welcome to the show.
Thanks, Ethan. Thanks for having me.
I know we're going to be talking about blockchain and security, something that we've kind of hinted at a little bit on the show before, but hopefully we can get into it a little bit more today. But I wanted to give you the opportunity first to introduce yourself to our audience.
Yeah, sure. Sounds good. My background is in cybersecurity, sort of spent the last 2 decades in that space. Initially, back in the days, was in the Israeli Cyber Command, the early 2000. And then around 2011, I started my previous company, which was doing mobile security. So basically, we were helping a lot of big enterprises to secure the mobile devices of their employees from malware and cyber attack. And eventually we got acquired. About 3 years into that venture, we got acquired by Checkpoint, which is sort of a well-known, one of the biggest cybersecurity vendors, a $20 billion company. They invented the firewall in the beginning of the 90s. And I was basically running their mobile cloud security for them. And at some point in like 2017, I stumbled into crypto and sort of started working on our cybersecurity offering for institutions that are dealing with crypto.
That's fantastic. Very impressive. I know we've pretty much all dealt with a firewall before, and I didn't really know that's where that came from. So very cool. We've talked a lot about cybersecurity in America over the last 3-4 years. It's been a topic on the news. I feel like not many people really understand it. I was hoping maybe you could break down what's the need for blockchain security and how is it different from what we saw maybe in the 90s and early 2000s?
First and foremost, cybersecurity in general changed dramatically over the years. I think in terms of what we had in the the solutions that we had in the 90s and then in the early 2000 and it's fine to say the previous decade, things continuously evolve. The reason why things usually evolve in cybersecurity is because by definition you're sort of working against a dynamic actor, right? So the bad guys on the other side are basically also humans, and they continuously evolve their tactics. So in general, the last decade was sort of challenging, as we all know, because a lot of U.S. corporations were hacked. There were a lot of fairly big breaches where a lot of personal information was leaked. Needless to say about what happened in the elections, and the interesting thing is that actually when we talk about crypto, is that basically, blockchain sort of carried the promise of changing all of it, right? So if you look at the traditional cybersecurity landscape, it's always sort of you always have this centralized risk, right? So you have a credit score company like Equifax. They have one central database where they store all the records and all the customers, all the people that they have the credit score on, and if that central database gets hacked, then everything is lost, right? With blockchain, it's actually very different, right? Because we now have this decentralized capability of storing information. By definition, it's sort of encrypted. Also, there is a small likelihood of actually disrupting it, right? So it's all sort of redundant and scattered across a lot of nodes, and it's much more resilient to cyber attacks. So, Bitcoin and Ethereum as a blockchain, you essentially need to basically boil the ocean to do something to the protocol, and potentially it's the most tested system from a cybersecurity standpoint on the planet. The problem is that, generally speaking, with blockchain, you actually run into two issues. One, sort of the responsibility on owning the asset, or essentially the private key, which is effectively just a long password, it is being delegated to the end user, right? So we all know that to keep our wallet secure, we need to keep the private key secure, and if the private key gets leaked, then potentially someone can steal all of our assets from that wallet. In addition, we have like another problem that a lot of people faced last couple of years, that there is no really sort of like, authentication built into the blockchain. So if we want to do a transaction, right, you need to send me your deposit address and I need to transfer you. I basically need to sign on your deposit address. And there is no real way for me to actually know in advance that this deposit address is actually referring to your account, right, Ethan, and not like someone else. So we've seen quite a lot of phishing and other type of attacks, which basically divert the transaction to the wrong people.
Yeah, that's very well said. Fireblocks was described to me as a secure transfer environment that gives financial institutions a way to move, blockchain-based digital assets. So are you primarily working with large institutions, or is this something that everyday people might be able to benefit from one day?
I will actually, say two things. One, primarily, we are currently addressing the institutional market. We have smaller players and bigger players in that space. But the interesting thing is that a lot of the financial institutions that are direct customers, they're actually offering their services to retail, to regular consumers. So there is a good chance that if you are interacting with certain services on then you will actually have Fireblocks on the other end, right? If you basically working with some of the leading lending platforms, or if you're working with some of the leading exchanges, then some of those guys are using us as their infrastructure and their backbone to manage the funds and the transfers.
I see. That's very interesting. And I know that you secured more than $9 billion so far, it's impressive. It's amazing to me how much gets transferred already. And I'm looking forward to the future. It's only going to ramp up, including more and more people, more and more institutions. Going back, you mentioned in 2017 you got into crypto. What was the moment you realized that the blockchain technology had a potential to kind of bring in a new era of cybersecurity or securing people's digital assets? What was the moment that really was kind of like an aha moment for you?
So yeah, it's a really good question. So we and that question, that the answer actually has two parts. So the attention was actually probably came through a non so pleasant event that basically we got involved into a fairly big investigation that happened in South Korea, where four exchanges got hacked over there, four crypto exchanges got hacked over there, and basically overnight, $200 million worth of Bitcoin were stolen. And we were part of the investigation team, sort of looking into that attack. And I was sort of I've seen a lot of bad things happen to people in my life on the cyber front, but I never seen anyone being suffer such a loss in such a short time. So I was sort of intrigued by that. And then we started digging into this new space. And I think my aha moment was that when I actually read the famous Satoshi white paper around Bitcoin and actually understood how it works. And then you sort of realize that this can really sort of completely disrupt how finance works, right? Basically completely disintermediate all the middlemen and, make things more efficient and more, I think, transparent. So, really remove a lot of the counterparty risk that exist in the traditional financial systems and the inefficiency. And as we were sort of exploring this space and talking with more and more, I would say, institutional players, it became very clear that it's not that the traditional stuff are working well, right? Most people were very frustrated from the way the traditional financial system works. And I think that's when I realized that it can change everything.
I know that the traditional financial system it's very complicated. Some people call it archaic. Generations of different technology has been used. But how would you describe Fireblocks and how it's going to improve upon the traditional security that's being used And how is it going to bring in a new age of blockchain security, for lack of a better term?
Yeah, so I think the first and foremost thing is that people need to basically move into blockchain, and it's sort of already happening with a lot of the so I would say crypto or public blockchain related projects. We see a lot of activity around financial institutions. A lot of financial institutions are basically diversifying their portfolio and their activity into blockchain, right? We also see quite a lot of innovative projects around optimizing the payments, right? Optimizing payment rails. Libra is probably the most famous project, but I think that there is a lot of other interesting and intriguing things that are currently happening and will basically disrupt that. And last but not least, I mean, when you talk with all the big banks on Wall Street or in all the big financial centers, they do have kind of projects that are running on top of blockchain, especially but mostly they're focusing. I think the majority of them are currently focusing on private blockchain, but really everybody see that, or I think everybody understand that at the end of the day, the future is not necessarily in the private blockchain, but for those guys, the private blockchain will be clearly the start because it's easier for them from a regulatory standpoint and from a security standpoint. But really, what sort of unlocks the full, the full potential for them is eventually to somehow move into an open system. Now, regardless of your particular use case of what you need to do over there, you run into 2 to 3 major issues around security. One is how do you guarantee the security of the storage of the asset, or what we call custody, which is essentially boils down to securing the private key. And the second issue is how do you secure the transfer, right? At the end of the day, the financial system is built, or let's take payments as a very simple use case. Payments is all about transferring value. You don't go to buy coffee without giving someone paying for it, right? So you need to transfer value, and the transaction over there is the transaction aspect over there is extremely important, and we are basically providing the technology to secure those transactions regarding the actual underlying blockchain. So it doesn't matter if you're using Bitcoin or you're using USDC, which is tokenized dollar on Ethereum, or you would use Libra, or you would use some private blockchain to do it. We will be there to basically make sure that your transaction actually goes through and basically lands in the secure and authenticated location on the other side. So that's sort of the second area that we're focusing on, and the third area is around more advanced use cases around tokenization and issuance of assets, where when those assets basically need to be minted or created against some specific logic. So that's a more complicated use case, but I think the first 2 use cases are quite simple to understand.
It's very interesting, and I was going to ask you earlier about how you're able to access these or provide security rather for these different blockchains. What's the mechanism that makes Fireblocks unique that it can provide security for, say, Bitcoin and other blockchains like Ethereum? How does that work?
Yeah, so I think this is probably one of the biggest value propositions that we bring. From a technology standpoint, the reason why we're actually able to do it is by leveraging a fairly new technology called Multiparty computation, or MPC. There is quite a lot of buzz about it right now in the industry. Basically, what this technology brings is the ability to do something that is fairly similar to multisig. So essentially create sort of a distributed structure on the wallet where there is no single person that owns the private key. Effectively, with MPC, there is really no private key. It's actually a distributed. There's no single private key. It's actually at the generation and at any given point of time, it's basically a distributed set of secrets that the participants hold. So in that sense, it's a little bit similar to multisig, where you actually require a threshold of people to basically, or a threshold of endpoints to basically interact when the transaction is being signed. And from a security standpoint, it removes a single point of compromise or a single point of failure. There is no single entity that you can hack and basically retrieve or create a control over the private key. Now, what really makes it different, or what sets it apart from multisig or other technologies, is that unlike multisig that is very specific to blockchain. So, for example, you have every protocol has a different support for it. It's done one way with Bitcoin and another way using on EOS, on another, like in actually Ethereum, you don't have really multisig. You need to use smart contracts, which historically sort of led to the parity hack. With MPC, you're actually working on the lower level. You're working on the cryptographic algorithm level, which is actually shared. There are basically only two cryptographic algorithms, more or less, ECDSA and EDDSA, and they are being used across all the blockchains, right? So with MPC, once you've implemented it once, or actually twice for those two algorithms, you can essentially scale your technology and support the security of any blockchain.
Well, that is fascinating. Thank you for explaining that. I know that we've been talking about securing digital assets and primarily financial assets. I think that makes sense to most people, essentially sending money over the internet. Do you see in the future other types of digital assets? And if so, what might those be? And how would you explain something like that to the layperson that really only understands blockchain as Bitcoin, for instance?
Yeah, I mean, I think I run into this question quite a lot when people ask me. I think people are just generally asking what sort of the promise of what we are doing in the general blockchain. So I think it has multiple levels, right? The first one is really sort of what we know as crypto and Bitcoin. But then immediately after, it's pretty obvious that you can tokenize any financial instrument, whether it's US dollar or it's a stock or bond. And that's also, I think, reasonably clear to people why you can apply that kind of logic to other financial instruments, because at the end of the day, so 95 of our activity today is not actually being done by paying with dollar bills, right? We actually using our credit card, so we use some form of digital cash, and we use some form of and we don't store if you investing in a company, you're not keeping the stocks in a safe in your house or in the bank. It's stored digitally by your bank. So I think those use cases are reasonably clear. But then there is an extension of those use cases to a variety of I would say other verticals. There is a lot of discussion around basically supply chain management, where a lot of the firms that are in the shipping or manufacturing industry, they need to track the supply. They need to understand where it is, where in every given moment. They need to understand the authenticity of those items. And I think it's maturing over there, and it's also quite powerful, right? Because the fact that at every given moment you're able to understand that the avocados that you're shipping from Mexico to the United States, where they are, who has the possession of them, and when they should arrive, and you're able to basically, and as they go through a variety of agents that are handling them, that capability becomes quite powerful. It also, by the way, leads to the integration of the financial tokenization and supply chain in things like trade finance, where you can do a lot of really interesting things. And then you also see use cases around, for example, healthcare, right, where I would say patient data is being secured over blockchain, and certain restrictions and encryption protocols are being applied in order for one, making sure that you have the possession on your own data, medical data, but also you can actually share it with different providers, either for insurance purposes or for actually receiving a treatment, and that everybody has a single source of of truth of what exactly your medical records are and what exactly your medical condition is.
Very good. It's kind of a weird question here, but it makes me think about historically, cryptography was important in warfare. And I know you mentioned talking about the hack in the, I think, the Korean exchange. And I remember last November, China announced that blockchain was the future and that they're going to be exploring blockchain a lot more. But do you see any implication that might be coming about for cyber warfare or securing national secrets or trying to protect personnel fighting in different countries or just do you think blockchain is going to be the next wave of cryptography?
Blockchain is being used as or essentially cryptography, or blockchain is an applied cryptography, and almost everything that is being almost all the technology that is utilized for blockchain is a cryptographic technology that in the majority of it that has the roots in military and intelligence applications. I think that there are basically probably two discussions or three different probably discussions here. One is does adoption of blockchain will set certain nations apart by modernizing their infrastructure, and I think that there is a lot of discussion around specifically China. I think that Mark Zuckerberg, when he was giving this testimony in front of the Senate, right, he basically made that point very clear that at the end of the day, if the US will not be able to run and adopt blockchain as fast as China, then they will end up in a very disadvantageous position compared to from an infrastructure standpoint, right? So that's one aspect. The second aspect is that if blockchain will become widely adopted, right, then it becomes an attack surface in a future conflict where cyber capabilities can be used, right? So right now, if let's say there is a conflict between two nations, it's very common that one nation will apply cyber warfare and will disrupt a critical infrastructure, including the financial systems of the other nation. Probably the most famous case is between Russia and Estonia that happened a couple of years ago, where it was a couple of days that basically allegedly the Russians basically disrupted, completely took down the financial infrastructure and day-to-day infrastructure of Estonia. And clearly, if you now shifting all your infrastructure into blockchain, there is a real question of how the blockchain will behave under that kind of stress scenario, right? When you will have a nation state pointing itself against that infrastructure. And then I think the third question is does it has application for real sort of warfare? I think there are. I've seen companies that are using blockchain, for example, for supply chain tracking, for critical elements for the weapon system, just to make sure that no one basically were able to replace the engine of the missile was a different engine, and the missile will not work. So I've seen that kind of applications, but probably the most interesting part there will be some form of collaboration technology for someone like NATO or some organization that needs to unite multiple commands, and then they need to share information between them in a confidential and secretive way, and then actually blockchain can be quite useful.
That is very, very interesting and really makes me think. Tell me, if you would, a little bit more about Fireblocks and what you guys are excited about and kind of what the next year might look like for you there.
Yeah, so I mean, we're growing quite rapidly, and we've within I think we've launched our company out of stealth mode in June 2018. 2019, and then we within sort of 2.5 quarters, we actually went from 4 customers to about 30 customers. Volume wise, as you mentioned, to date we secured more than $9 billion of volume, and currently we are, I think, securing something that is north to $3 billion volume per month. So things are really growing nicely. I think the primary thing that we are currently focused on is two things. One is to sort of connect the marketplace, or connect the different institutional players on the marketplace, and then sort of by those means to also extend the connectivity to the retail customers, and sort of unlock the liquidity and unlock the ease of those people to transfer assets between them in a secure manner, right? Because right now there is a lot of operational deficiency in terms of how those things are being done, and also there is a lot of operational deficiency in terms of how the assets are being stored. So as more and more counterparties we are bringing into our network, and we just released a couple of really interesting capabilities on that front, we allow them to transfer and settle those transactions and quite quickly and efficiently and securely between them. So that's one area that we're extremely excited about, and we're excited to see how this network actually grows. The other area that we are fairly focused on, and hopefully 2020 will be a big year, is around, I would say, infrastructure, sort of moving us from say trading use cases to payment use cases, where we'll start Libra and other projects will launch, and we start to see use cases where those assets are being transferred in a much more, say, consumer retail oriented way. And we really sort of putting a lot of focus in terms of assisting and putting rails and infrastructure in order to help that make happen in a secure fashion.
Very nice. And congratulations on your success so far. I want to thank you for coming on the podcast and explaining some of these complicated themes to us. The goal each episode is to demystify this technology, and you did a very wonderful job. Again, thank you. I know we're out of time, but I just wanted to give you the last few moments here to give us anything in closing, and maybe where people can go to learn more about Fireblocks.
Yeah. So again, thank you so much for inviting me to talk about it. I think that at the end of the day, the cybersecurity and operations, it's sort of at the heart of blockchain and crypto, especially as it comes to meaningful activity that people are already conducting today. And I think it's first and foremost, it's very important for us to educate people about how things can be done more securely and how things can be done in a more streamlined fashion, because at the end of the day, this is sort of what drives the adoption. I think that making sure that people feel comfortable with the asset class and feel comfortable and secure with operating with those assets, it just increases the number of participants and also increases the amount of use cases that we see in the market.
That's wonderful. Well, Michael, thank you very much for your time. This has been an absolute pleasure, and we hope to talk to you again soon.
Yeah, thank you so much.
Thank you for tuning into this episode of The Blockchain Show. My guest today was Michael Shaulov, the CEO and co-founder of Fireblocks, a secure transfer environment that gives financial institutions a safe way to move blockchain-based digital assets. If you like this episode, please give us a kind review wherever you listen to this podcast. If you'd be so kind as to share this with someone who might gain something from it, that would be very much appreciated. Thank you, everybody, for being with us in this new year. We've got a lot of exciting and educational episodes to come in the near future, so please be sure to check back regularly or subscribe to the show so you never miss one. You can catch all of our shows at theblockchainshow.com, and thanks again.